Welcome to This Explainer. Today, we're cutting through all the hype surrounding the Western fintech market. We're going to look at how the absolute most profitable digital banking giant in the world is actually dominating quietly from the Southern Hemisphere. We've got two major players, totally different playbooks, and numbers that'll completely change how you view a successful digital bank.
Here's our roadmap for today. We're covering Chime's Wall Street debut, Nubank's global dominance, the difference between competing in a war zone versus a greenfield, how their business models actually work, and finally, their global expansion playbooks. We're breaking down these two financial juggernauts to understand the real mechanisms behind their multi-billion-dollar valuations. Section 1. Chime's Wall Street debut. We're kicking things off right here in the US, looking at a company that literally changed how mainstream America banks. $18.4 billion. Let that number sink in for a second. That's the valuation Chime hit during its June 2025 IPO. They successfully went public on the NASDAQ, raised $864 million, and officially cemented their spot as a massive Silicon Valley success story. And honestly, it makes total sense when you look at their milestones. Chime hit 10.2 million active users and pulled in $2.2 billion in revenue for the full year of 2025. Plus, and this is huge for investors, they finally achieved GAAP profitability in the first quarter of 2026. They're processing a wild $8 billion in transactions every single month, snatching serious market share right out from under traditional legacy banks. But scaling a fintech giant in the US isn't exactly a walk in the park. CFPB Director Rohit Chopra made it crystal clear. Federal law is absolutely not a suggestion. Chime actually got hit with a $4.55 million penalty and a redress order over delayed consumer refunds when accounts were closed. It's a pretty stark reminder of how heavily scrutinized and strict the American banking environment really is. Section 2. Nubank's global dominance. Let's travel about 5,000 miles south of Silicon Valley down to Sao Paulo, Brazil, where we get a totally different picture.
Because what if the biggest neobank success story isn't happening in Silicon Valley at all? If Chime's numbers blew you away, brace yourself. The world's most profitable digital bank is quite literally rewriting the global rules of banking.
Just compare their first quarter profits. Chime, after a decade of grinding, posted a $12.7 million quarterly profit. Nubank, they pulled in an incredible $557 million. That means Nubank's quarterly profit is roughly 44 times larger than Chime's. It's just wild.
It's basically David and Goliath, but completely reversed. While Chime is celebrating a very respectable 10.2 million active members in the US, Nubank is operating in an entirely different universe with 118.6 million global customers. They actually bring in more revenue than competitors like Revolut and Chime combined.
Section 3. War zones versus greenfields. So why the massive gap in these numbers? Well, it all boils down to the radically different markets these companies decided to conquer.
The strategic divide here is striking. Chime is fighting in the US, which analysts describe as an ultra-competitive war zone. Consumers already have banks, and there are strict regulatory limits on fee income. Chime has to spend heavily just to win a single customer. Nubank, on the other hand, walked into a literal greenfield in Latin America. Down in Brazil, 30% of adults didn't even have a bank account. Traditional banks were charging sky-high fees, and interest rates were sitting between 15% and 20%.
Because they had this greenfield advantage, Nubank's customer acquisition costs are crazy low, like $5 to $7 a person. This leads us to a crucial banking metric, the efficiency ratio. Since they didn't have to burn billions fighting incumbents, Nubank achieved a 24.7% efficiency ratio. Basically, that means they only spend about 25 cents to earn a dollar. That level of efficiency absolutely puts traditional banks to shame.
Section 4. Decoding the business models. The market environment directly dictates the business model, which perfectly explains how these two companies actually generate cash.
Let's put Nubank's strategy into perspective by comparing it to China's WeBank. Now, WeBank has a massive 400 million customers, but they focus on micro-lending, making only about $10.50 in revenue per customer. Nubank went a different route. They targeted the middle class, people with actual purchasing power, and they're generating $110 per customer with a 17% profit margin. It's an absolute masterclass in unit economics. And get this, a staggering 84% of their revenue comes straight from interest income. While a lot of other neobanks are trying to build these complex super apps with crypto trading and travel insurance, Nubank just kept a laser focus on credit products. By tapping into Brazil's high interest rates, they basically built a highly predictable, high-margin money printing machine.
But Chime is definitely catching on to this. They're realizing the sheer power of credit too, pivoting from a fee-free transaction model into higher-margin liquidity products. Their MyPay feature just scaled to a $400 million revenue run rate, and that's with only a 1% loss rate. They're also rolling out instant loans and this new Chime Prime tier to drive credit spending. Both companies know that credit is the ultimate engine for expanding your margins.
Section 5, the Global Expansion Playbook. Looking ahead, both of these banks have massive ambitions, but their playbooks for growth couldn't be more different.
Chime is digging its heels right into U.S. soil. Their strategy is all about deepening engagement at home. They're launching Chime Prime for higher earners, they're scaling enterprise channels so people get their payroll deposited directly, and they are heavily pushing their credit cards to shift users away from debit. They want to be the undisputed primary bank account for mainstream America.
Meanwhile, Nubank is pulling off what might be a masterstroke of global expansion. Instead of burning billions trying to enter a new market from scratch, they dropped $250 million for a 10% stake in Africa's fastest-growing digital bank, TimeBank. Next, they're transferring their operational know-how to scale this local champion. And finally, they're eyeing a massive payout when TimeBank targets a New York IPO in 2028. It's a genius way to gain exposure to Africa's explosive growth without taking on the risk of launching there directly.
So as we wrap up this explainer, I want to leave you with a serious question. We've seen the numbers today. Nubank is crushing almost every competitor in revenue, profit, efficiency, and scale. Yet they're trading at just 4.5 times their revenue, while the Western competitor like Revolut sits way up at an 11.25 multiple. If the most successful neobank on the planet is hiding in plain sight down in São Paulo, why do Western markets keep valuing less profitable local companies so much higher? Is the market literally missing the biggest player in the room? Definitely something to think about. Thanks for joining me, and we'll see you next time.